Welcome back friends to Finance Tube. Continuing with the lecture series, the question and answer series with Ramanujam here. Let's have the next question. So Ramanujam, please tell us, our viewers want to know that what is the impact of IND AS so far as the taxation in India is concerned. This has been a burning question with a lot of CFOs and finance controllers.
That's a very good question and a very valid question, Vishal, because after introduction of IND AS, the one area which is impacting a lot of companies is tax. So after IND AS got introduced, the CBDT came up with something known as ICDS, which is Income Computation and Disclosure Standards. So there are 10 standards which they have introduced, and the companies are expected to follow that when it comes to computation of tax. So certain accounting adjustments that we make from an IND AS perspective, that is still not answered as far as the treatment of that in tax is concerned. For example, under IND AS, the fair value accounting is mandatory as far as ESOPs is concerned, but there is no specific standard under ICDS which covers the accounting for ESOPs under tax. So these questions are still unanswered. For example, investments fair value, what we do as far as IND AS is concerned, that is directly eliminated as far as tax is concerned, and they don't encourage fair value accounting at all. So the biggest challenge for the companies in India today is marrying the tax books vis-a-vis the accounting books which they are following. And typically this is not a challenge which is there in overseas countries, because their tax books generally talk to their accounting books as far as IFRS is concerned. Another important aspect is
I was just coming to that. What about MAT, minimum alternate tax?
Yeah, so the impact of MAT is definitely there, because the government of India came up with a notification as far as their budget, union budget is concerned, and certain adjustments what we take as a part of IND AS from an opening balance sheet perspective, the treatment of that as MAT is also different. So the companies have to really give a lot of focus as far as the MAT impact of this IND AS adjustments is concerned. Another important area which I want to cover is the M&A transactions from an IND AS perspective. Tax neutral demergers is going to undergo a major change, because when it comes to tax neutral demergers under section 2 subsection 19AA of income tax, the book value accounting was permissible, but as far as IND AS is concerned, book value accounting is not permissible when it comes to transactions between two unrelated parties. So there is going to be a big set of challenge which companies are going to face when it comes to mergers and acquisitions from an IND AS perspective.
Okay, so I think some dark clouds coming our way when it comes to mergers and acquisitions. Thank you so much, Ramanujam, for decoding the tax code for us so far as IND AS is concerned.
Thank you, Vishal.
We'll continue with more questions in our upcoming videos.
Thank you.
So at the end of this video, friends, what I'm going to do is I'm going to give you an opportunity to ask more questions to our expert here, Mr. Ramanujam. So if you have any questions for him, do write in the comment section, and let me assure you I'll bring him back here for more answers.